morning and welcome, Patriot Radio News Hour. Joe and Jason on this Monday. I hope you had a great weekend. We're going to get rain here in the Valley of the Sun for the next few days, but then another gorgeous weekend coming. The heat's just around the corner. I know, right? We're all like, oh, any day that is another day that we're not at 100 degrees is a very good day, even if it's a Monday. Our toll-free number, 800-951-0592. And just like we thought, China was back from holiday. Yeah, gold is off to the races. The website at allamericangold.com, and it's going to be another action-packed week. You know, it seems like, well, let's face it, I don't remember the last time it wasn't. I mean, we're probably on what? Really, since COVID, it seems like every week has something new for us. And this week will be no different. We're going to get PMI, ISM. We're going to get mortgage applications. And we already kind of know that's not going to be a very good number. Initial jobless claims, right? So that's Thursday. Are we going to stay elevated? I think that's going to be another important one. We already got the ISM survey data today, and it was not what we wanted to see for rate cuts, which, again, the stagflationary kind of signals that are coming out, and they're just saying, hey, listen, things are costing more. And I don't think that's going to change much. Came in at 50.8. That was less than expected. So the headline number, good. Anything below 50, by the way, is contraction. We were at 54, 50.8. They thought it was going to be 51.5. By the way, that is the lowest number since October 2023. So it's been a while since we've been this low. ISM services, that one rose to 51.6. So that was one of the ones that they were hoping was going to be worse. Under the hood, that's where things got ugly. Prices paid. So how much are we paying on the prices? And unfortunately, this one came in hotter than expected. And we're going to hear from Jay Powell this week. We expect him to kind of be pushing back on the rate cuts as Donald Trump continues to hammer wanting the Federal Reserve to be cutting the rate. So we're going to keep our eye on it. We're going to see what happens with all of this. We get trade balances in March. That should be a wild number, right? I mean, a lot of stuff coming in early, right, to avoid tariffs. Some of the bigger earnings, we got Palantir out. We've got Fidelity's going to be out this week and a few others, but not a huge amount of earnings, at least on tomorrow anyway, for importance. We do have a $58 billion auction today. It's a 3-year auction. It's a lot. Tomorrow, $42 billion 10-year auction, followed on Thursday by a 30-year $25 billion auction. Remember, that is the Fed trying to refund itself, and this is something now they got to do it like every quarter, kind of an extra auction on top of the regular auctions that are occurring. So we'll see. This is going to be very interesting as to whether these auctions go well or not. So we'll keep our eyes on that. So like I said, always busy here right now. The 10-year note's trending higher, so not a great sign today. Like I said, the bigger news will be a little later today. How well does this $58 billion in 3 years go? So these are the things that we're going to be looking for this week. Obviously, what Jay Powell says, are we going to get any trade stuff? I don't know, right? I don't know. Maybe we will. Maybe we won't. It looks like Doge may be over. Elon has left the building. And Jason, that one came in less than expected, right? They started at $2 trillion, then said $1 trillion. We may get $160 billion out of Doge, but listen, I don't want to downplay that. $160 billion is a crap load of money, Jason.
It's a lot of money, Joe. It's a lot of money. The fake money have these $1 trillion numbers attached to it, but the billions, the millions are where the actual, this is where people are actually getting paid, Joe. This is where actual money is going, so it does make a huge difference. So gold just looks so good, Joe. I was watching some things, taking in some information. The things that are going on with the bond market, with the treasuries, especially internationally, with Japan and China, Joe. If you've never bought gold, you better jump on it. And if you have gold and you're thinking about, well, I'm going to see if it's going to go down some more. I don't care if gold were to go down $500 an ounce this week. You're going to see $500,000, $1,500 raises in the months to come. Gold's going to explode.
800-951-0592. Patriot Radio News Hour. Joe and Jason on this Monday. And, yeah, I still do have an echo right now. So just, but not bad. It's something we can deal with. Quick look at the markets here. Dow's up 20. The S&P down 23. The NASDAQ down 104. The 10-year note, 434. And like I said, this is a bigger auction week than normal. So I'm anticipating that this is going to stay elevated. That's my guess, barring some big unforeseen announcement. Crude oil's down again. And it's still there. Still there, guys. So crude oil's down again, down $1.60, $56 and change. News there. Yeah, now it's fixed. News there is Saudi Arabia. Saudi Arabia says, hey, we're going to help the U.S. We're going to help the U.S. now. And start increasing oil production. So that is why crude oil is down. So we'll keep to watch on that. Gold right now up over $70. Again, this is just becoming commonplace. Jason was talking about, hey, guys, get ready for $500 days. Right? It could be up 500. It could be down 500. It could be up 1,000. There's a lot happening in this market, and the big thing is that Basel III kicks in now in July. Why is that important? Because we've known about Basel for quite a while, and the answer is simple. Gold becomes a Tier 1 asset for all the banks, officially. What does that mean? Well, here's what it means. Gold, for whatever reason, they wanted to be considered risky. So if you had, and let's keep it simple, let's just say a bank a central bank, a regional bank, any company, really, had gold as an asset on their balance sheet. They would only allow you to value it at half of its value. Now, starting in July, all banks can value it at full value. I mean, that's a huge difference. And, of course, what did China do? Hey, we want our insurance companies now to buy gold. Why? Because they can hold it and have it be at 100% value. Will our banks get into gold? I don't know. They can. It's an opportunity. You can't rule it out. Will a lot of foreign banks do this? Most likely. And I think this is why when we sit here talking about gold moves, this is why it is. I think we're going to see even more action in gold because of this. And when you think about what I said today, on top of all the auctions we've got to do every day, tens of billions of dollars. Now all of a sudden, oh wait, here's a week that we've got to add an extra $125 billion. And of course, what did they say in the last meeting? Well, you know what? They may go up before the end of the year. Maybe we may need $150 billion. Right? And then what? I need $200 billion. We're going to continue to see this incredible move coming out of the gold market. You know, over the weekend, Goldman was talking about gold again and talking about that gold and silver correlation. You know, and I had told everyone, if you had listened to me at all, I always said I liked 65 to 1. The industry, historically, 45 to 80. Now, there's been a few times where that number's been below 45, right? How many ounces of silver to buy an ounce of gold? And obviously right now, well above the $80 level. And Goldman is saying, hey, one of the reasons why we may have to adjust this a little bit is that the gold makes it better suited, right, as a reserve. Right now, that's a tier 1 asset. It doesn't take up near the space, right? I mean, there's a lot of reasons why it makes it better. $1 billion. So here's what's funny: as the price of gold's gone up, I used to say when gold was like $300. $1 billion would fit in your shoebox. Well, we've got a new number. Goldman Sachs, $1 billion of gold will fit in a suitcase. Yeah. And I'm not talking about the big jumbo suitcase, right? I'm not talking about the one that your wife packs, that you're going to be gone for a long weekend, and yet somehow she's got the big suitcase, the little suitcase, and the makeup bag. No. I'm just talking about the one that can fit in the overhead. You could easily put $1 billion of gold in it. So this is something, again, I think we're going to see a change here in the gold marketplace. We're seeing it, really a lot lately, which is, hey, look at today, right? Gold's up 70, and that's kind of like nothing, right? That's just, hey, yeah, that's what it does now, right? $70, I'm not kidding, right? $70 a couple of years ago, you're like, whoa, what a move. Now it's like, no, again, right? 40 or 50 is like a little move now. Oh, hey, gold only moved $20 today, right? Gold only moved $20, and you're like, oh, well, that was barely a move at all. So, Jason, I've just kind of been reiterating. I know you were working through some technical things there. when you were talking about $500 moves in gold in a day, this is what we're telling you. Listen, gold's building here. And we are going to have a huge, huge structural change in the global debt markets. Everybody's got the same problem, which is too much debt and not enough revenues and all of these historical standards. Oh, debt to GDP should be 3% or less. You're okay. Well, now most of the world's staring at 10, right? Not 3, 10. And guess what? It's getting worse. And it's getting worse. And it's getting worse. Why do you think they made gold a tier 1 asset again? Do you know why? Because they know. Well, God, it's going to be better than holding. Can you imagine who in their right mind wants to hold Japanese debt? Who in their right mind wants to hold European or Chinese debt? Who in their right mind wants to hold U.S. debt?
It's interesting you say that, because what I was watching over the weekend was Japanese might want to start holding more yen instead of dollars. This is what we might be looking at. The Japanese people and Japanese investors are starting to think, well, there's these other fiat currencies and then there's the dollar. Well, if we want less dollars, what's number 2 for Japan? Number 2 for Japan will be the yen. Number 2 for China will be the yuan, right, Joe? This is one of the ways that they're trying to move out. This is why Joe keeps telling you about these auctions that get clogged up and they're just not finding the buyers. The Fed's going to have to buy all this. And,
It's coming.
Japan held their first meeting with Vietnam and China. They had like a roundtable meeting of the 3 countries. They haven't done this in decades and decades, because they're trying to figure out how to dump dollars together. And these 3 countries, it was South Korea, Vietnam, China, Japan. These countries, you would think they're all Asian. You think, oh, they all get along. No, these
no, they do not like each other.
But man, are they planning, aren't they, Joe? And here's the thing: we talk about, well, if America, the Fed decides to drop rates and start printing, that's going to create the inflation, and that's going to make gold do well. There looks like it's very possible that the Fed is not going to be able to print money. It's actually possible that they may be forced not to, because if dollars keep getting dumped, they're going to have to take on that water first, and printing money, it makes it worse. So I don't know if the Fed wants to take on the entire bond market, Joe. They're probably going to do everything they can not to, and in the end, they probably will. And that'll be economic catastrophe and inflation on top of it. Can you imagine printing money, Joe? Lowering rates and inflation still goes up. I mentioned this a couple of years ago, and you're like, oh, that's usually not how it works. But you get enough dollars, Joe, you'll get the inflation no matter what the situation, Joe.
Yeah, this is something where the more I look, it's hard to see how the Federal Reserve is going to avoid having to bail out the bond market. It's just, I don't know how it's possible. I mean, is it anything's possible, I guess, right? But when we start looking at what the primary dealers say, when we start, even with the Treasury, Scott Bassett said, hey, we may have to, they're already buying a couple of $1 billion in these auctions that they've just got to turn around, right, and resell later, saying, hey, we may have to up it, because here's the thing. I think what they want to avoid is, hey, the Treasury's like, hey, we're going to avoid $1, $2, $3 billion becoming a problem, okay? Because the second, right, one of these, $1 billion doesn't sell, you got a problem, right? So they're trying to think, hey, we're going to try to head off the little problem, and hopefully the Fed isn't going to have to come in with the bazooka. And Jason, I don't see a way out of it. The bazooka's coming whether they want to admit it or not.
And then this is why the gold prices have been moving and surging in the last year and a half, and it's going to keep happening. You're going to keep seeing gold surging. Yeah, we had this little pocket here where it's kind of stopped, and we had a couple of pockets in the last 16 months. They were very short pockets. You know, Joe, I think it was 2,800, or 2,900. It kind of, and there was a pocket, I think, in 2024. We got racing at the beginning of the year. It was $2,000 on Valentine's Day, raced right up to 2,500. I mean, it took no time. It's funny how they're talking about how gold's going up in 2025, but let me look at that. 2,000 to 2,500 gold happened in a snap. That was 25%. No, it was that's 12.5%, 15% rise in just a few months. That's huge. And then it did settle for a little bit, and then it blew up to 2,800, 2,900, and then at the end of the year about 2,700, 2,750, 2,800, and then 2025 came, and it just keeps on going. And people look at it like people got this mindset like it's like some stock you got to watch. It might get ready to have a sell off. I'm going to sell it, then I'm going to buy it when it goes down, and it just doesn't work with your savings, Joe. Your savings is supposed to be safer and stable. And so these people waiting for whatever price point or some downward trend on gold, they're going to miss the boat, Joe.
We've got a huge Gold Eagle sale coming up next. Be ready. 800-951-0592. Joe and Jason. Patriot Radio News Hour on this Monday. You never know what's going to walk in the door next. Gold's up 70. 33.12. I've got 40 Gold Eagles, and I've got 1 Gold Buffalo. 33.25. So, was that $13 over spot for a 1 ounce American Gold Eagle? I do have 1 Buffalo, so I've got 41 coins available at essentially spot, right? You can't buy these things for spot. Everyone's like, why can't I buy it for spot? Well, guess what? Today, here you go. I'll tell you what, you buy 10 or more, I'll give them to you at spot. Whatever spot is when you call, that's what we'll give it to you at 800-951-0592. The phone's already ringing, so if you want to get in, here's your chance. I also have 4 1-ounce gold bars. Those I'm going to sell at under spot. $3,300 for 4 1-ounce gold bars. However you want to go today, this is your opportunity. People, why is it gold like stocks and this and that? Well, because it's a physical commodity. But Jason, this is something where when we look at gold price, gold must have heard because now it's $33.15. So maybe it's going to be below spot before the day's over. 40 Gold Eagles, 1 Buffalo, 33.25. $10 over spot. By the way, if you buy 10 or more, I'll give them to you at spot. And then 4 1-ounce gold bars, the gold bars will do under spot. $3,300 at 800-951-0592. Keep adding to your portfolios. Understand what is really happening in the world. Right? Did the trade war just start because of Donald Trump? No. You know why the trade war started? Because, gosh, we got to do something, right? You guys they had already stopped adding treasuries, right? China's been selling. Japan stopped adding, right? So now we got to find some other way, right? We got to do something. And this was the plan they came up with, Jason. But I'm going to tell you right now, we need answers. We got, what, a week or two? And then the Treasury's going to run out of money, right? And then, right, remember, We're on emergency measures. We'll see what we said. We will get an announcement, I'm sure of it, this week or next as to when D-Day is going to hit. And, Jason, by that time, the Congress better get its act together.
Yeah, I don't think anyone's really prepared in Washington, D.C. and in the financial markets for how bad. We know someone's ready, right? The people that set this thing up all will be ready. The guys that have their ear to the ground, the big business interested people, they're ready. But, Joe, no one's going to be ready for this. And I've said it, and I've said it, and I've said it. I'm going to keep on saying this. Gold does not react to inflation and printing of money. Gold is a leading indicator. Warren Buffett, Jamie Dimon, Donald Trump, all these big interested parties, not all of them are buying gold, but that doesn't really matter. Gold is not as big of a market as the stock market. These guys are exiting stocks. They've been doing it for a couple of years. The gold market is being bought and being bought and being bought because these guys are getting into it now. Gold is telling you what's getting ready to happen. Gold, as I said, was $2,000. It was under $2,000 an ounce in late 23. It was at $2,000, right on $2,000 on Valentine's Day 2024. And now we've talked about it tipping off at $3,500, and it's been in this $3,250 to $3,450 range for a couple of weeks. It did this in 16 months, not even 16 months, 15, 14 months. It's telling you that something's going to happen. And I don't think gold has stopped showing us what's going to happen, because what's going to happen, I don't think it's going to be short this time. It's not going to be a COVID bounce market crash, and I don't know if the Fed's going to be able to print the way they printed in the past. I know that they will if they have to. If the world's burning practically, they'll print. But it sure looks like, Joe, that they're trying to figure out where to stuff all this before they decide to actually step in. Right now, Joe, I think they're trying to stuff it here, stuff it there. All of the Western countries, since China's been selling, and China was the number one holder of treasuries. Wasn't that long ago, right, Joe? They were the number one. Japan was number two. And Japan is selling. And Japan, their level of owning this stuff was at the level of China. And Japan doesn't want it. Japan knows what's getting ready to happen. They don't like the tariff war, and they don't feel secure. These countries don't feel secure. So who do you think is buying all this gold? We've been talking for how many years, Joe, of record buying of gold. Gold prices going up, leading indicator of a huge problem. We've said many times in the air, Joe, when gold goes to $10,000, that's all well and good if you're holding gold, but it means the world is due for some massive issues. And Joe's been doing this way longer than me. To see gold move like this, you've seen gold double over, Joe, so you've seen this before, but this is a quick double over. I mean, we almost doubled over from a 2,000 point dollar price tag on gold to almost a 4,000 in 15, 14 months. That's huge, Joe. It's huge, and the problems the world's getting ready to see is going to force the gold price even higher, Joe. It's gold at $3,300 is a steal compared to just 1 year from now, Joe.
Well, let me just lay this out. So they're talking about a fundamental change in gold because of the fact that the central banks now view gold much differently, right? And obviously it now being a tier one asset is part of that. But when you look at what they're talking about for price, and this is the thing, Goldman reiterated over the weekend that 3,700 gold by year end, $4,000 gold by mid-26, but they keep putting this note on. By the way, this is probably light and saying that it could be as high as 4,500 by the end of this year. They're like, we just got to wait to see what happens with all these debt markets. By the way, the Buffalo is gone. These Gold Eagles are flying. Get them while you can. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Monday. Gold's up $77, 33.18. We've sold the Buffalo. That is gone. We've sold, of the 40 Gold Eagles, we've sold 10. Obviously, someone was taking advantage there. Remember, Gold Eagles right now, 30 of them left. 33 1/4. That is now $7 over spot. By the way, if you're like, no, it's not, Joe. I'm watching the TV right now. Well, TV gold, 33.25, right? You know, and of course, TV is not spot, right? That's the next gold contract. That is the gold contract that's getting traded right now, which it happens to be the June gold contract. But 1 ounce Gold Eagles, as long as spot is less, if you buy 10 or more, I'll sell them to you at spot, right? Okay, so right now, 33.17 on spot. By the way, I still have the 4 bars at 3,300, so that's $17 under spot on these gold bars. But Jason, nobody, and I mean nobody's got this price in the country today. Gold Eagles, for all practical terms here until I'm out. The last third. By the way, I've got 2 lines open. Get in here. We're gonna be spot.
We're gonna be selling this gold. This is an outstanding price. We don't sell a lot of bullion gold. We do when we have it. Joe and I are going to try to get some of this cheaper gold coming through maybe more regularly. We're going to see. Joe and I are about to get really, really busy. So the busier we get, the more cheap gold we may end up bringing to the air. So start telling your friends that listen to the show. Start listening regularly. If you're one of those guys that listens a couple times a week, this cheap at spot gold, which we can't guarantee all the time, it may become more regular if what Joe and I are planning starts to come to fruition. And Joe and Jason's time is going to become fleeting as we work on some new stuff, right, Joe? We got some big things happening, and here at the radio station, I got big things happening, and it's going to get really exciting in 2025. Let me say.
Very, very, very exciting things coming, but I'm just going to tell you right now, don't mess around here. This is dumb pricing, especially when you're sitting there and you look at these banks, which they hate gold. Do you know what they tried to pull at this year? You know what? They didn't want to believe last year. So what did they say? Oh, no. I mean, yeah, some guys, gold's going to be $2,500. Now what are they? You know what they're writing about? Oh, there's a change. There's a structural change to gold. Well, what's the change? What's the structural change? Oh, well, everybody wants it. What don't they want? Fiat debt. That's what they don't want. And you're right, Jason's right? You got a lot of nationalistic stuff. When you have countries that hate each other, which is where you would put China and Japan, and they start saying, hey, friend, right? Maybe we need to work more closely together because the friend that we thought, they're having troubles now, and now they want payback. See, right? You know, look at it this way. Look at it. America was the wealthy friend. You know, the one, he bought all the drinks, took you out to the fancy dinner, right? All that stuff. Like, you do, I'm going out with Joe Smuckatelli, man. We're going to have a great time, and he's gonna buy expensive shots of tequila, and, you know, we're going to have a great time. And now Smuckatelli's poor. And now he's looking at you saying, dude, buy me a shot of this tequila. And you're like, well, I don't have the money to buy you a shot of tequila, right? What do you mean? Right? This is what's happening. This is exactly what's happening, Jason.
My Walmart truck driver relative was cut off early from his hours. Hasn't had it happen, I think, maybe since he's worked there. Yeah, they sent him home 6 hours early. for his weekend. He does the full week trucking, cutting hours back on Walmart workers. Suddenly, I'm hearing Walmart workers getting the hours cut
and that's
back.
a trucker job. That means there's just not enough freight. Well, that's the big worry.
Freight is
we
slowed
haven't
down.
seen it. Yeah, we're going to see here.
It's happening. It's happening. It's happening. You got to jump on these Gold Eagles, Jack.
I want to say one thing really quick. Let me say this because this is something I needed to say. This year, the government and the IRS have changed the tax reporting.
Yes.
Remember, one of the great things about pre-33 gold is you can buy it and sell it and not get 1099. The other part is it's considered a collectible and not bullion. That's a huge thing. But now, Gold Eagles, Maple Leafs, Krugerrands, you can sell me bars. I don't have to 1099 when you go to sell. That is a huge change. It's still bullion, but Jason, that is a huge change here. So now here's the great part. The only what they decided the only thing you got a 1099 on gold is when you buy delivery bars. Right, those are 400 ounces at a pop. So what is that, like $1.3 million for a good for a delivery bar? So Jason, that's another reason that makes it even. I think when you're seeing why is gold so appealing, this is another reason why.
800-951-0592. From what I understand, there's only 30 left as of 5 minutes ago. So
and the phones are lighting up. So get in while you can.
Gold at spot.
800
Gold at spot.
951-0592. Final segment coming up. 800-951-0592. And man, I was certain that we were going to get this consolidation period in gold. And of course, I told you, China was on holiday, but I thought, okay, it's a good time, for maybe some consolidation, and we just haven't had any. And I wake up this morning, Jason, the consolidation was over. Just like that. It's over. And why? Because I promise you, one of these central banks said, "Oh, wait a minute! I can buy gold for less than $3,300 right now. Yeah, I'll take it. The remaining 1 ounce Gold Eagle. So I went out there, had another 10. So now we're down to 20. Right? This is how it's going. Get in here and get them. Right now, gold $3,315. 1 ounce American Gold Eagles, $33.25, 10 or more. Spot, $33.15. To give you an idea, what would they're like $3,600? I mean, you're saving almost $300 an ounce on this stuff. That's. Why are we? And it sucks because it's Monday. You're like, oh wait, I'm not ready yet. No, you got to get ready. By the way, silver up 31 cents today at 32.27. Wall Street remains to be mixed. Let's see here. We'll make America okay. Scott Bassett trying to. Well, yeah, I was hoping a trade deal. Apparently not. So no news on any deals. And then Warren Buffett stepping down at Berkshire Hathaway this weekend. So what is that going to mean? You know what? The guy's been there forever. I don't know if that will cause some less confidence in the market, Jason. It could. I mean, he's kind of like, the guy that, okay, as long as Warren Buffett's calm, we can all be calm. Who's going to fill that role? I don't know.
Yeah, let's see who fills the role, right? Does it matter, Joe? In the end, when it comes to this economic mess, does it really matter? And I think the answer is no. How much distraction is going to be on the tube on the economic shows, and how much on the geopolitical side? Sure feels like a good old-fashioned war or something, or some cyber attack or some huge emergency is within the next 12 months, Joe. They need more places to point fingers at for the mess that they have created. We should not have a central bank. It ruins people across this country. And I guess, Joe, over the last 100 years, people have just gotten used to being poor and being picked on by their government. And gold is one of the reasons I was able to be picked on a little less, Joe.
Yeah, and it's funny because people they got people to not care about it, right? Most people probably think the Federal Reserve does things to help them. Oh, thank gosh we got this Federal Reserve. Yeah, I mean, man, where would we be without them, right? And here's the realities: we wouldn't be in this debt mess. The dollar would actually be valuable, Instead, right now it's almost like, we're not quite there yet. But are we going to be walking around with wheelbarrows full of cash and people robbing you and dumping the cash out for the wheelbarrow, right? The Weimar Republic type. The last of the gold eagles. 33.25, 10 or